Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the forexpsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpsummit.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we will take a look at the New Zealand dollar because euro currency is still calling around the same areas. Nothing really new has been formed since our recent discussion on the euro currency. That's why it makes sense probably to take a look at something else. So I have chosen the Kiwi since here we have very nice pattern is forming, and recently, maybe a couple of weeks ago, we talked about this pattern and another one that has been formed right before election. So if you remember, last time when we have talked on the New Zealand dollar, we have discussed this Gartley's triple to sell pattern. So it's fib level, ABCD upward direction, this drop. So as a result, we've got this move down, ABCD retracement that creates the Gartley's triple to sell. The upward action was a bit overextended due to the elections rush. The spike up was slightly higher than the ABCD target. But anyway, after that, market has dropped significantly. So as you can see, the Gartley's triple to minimum target has been completed. But actually, if we will turn right now to greater pattern, as you can see, this is head and shoulders. It has been formed here, and right now market stands at the point where logically the breakout should happen, since market already has formed the right shoulder, right? So as it has returned back to the neckline, we should get some kind of the breakout down. So, and if we will estimate the target of this potential pattern, right? So probably it's better to delete the pivots. Then probably this minimum target of this pattern should be around 69.50. This will be minimum targets. AB equals CD. As you can see, based on recent actions, chances of the breakout are not really bad. So the CD leg is very fast, much faster than the AB. Market has broken for the pivot, monthly pivot, weekly pivot. Right now it stands very close to the monthly pivot support one and the 50% level. 50% support is 70-80 area. From that low to stop, this market right now stands at the neckline, daily average sold, and fib level. This combination creates a very interesting setup, potential setup that we could get, and that could give us really attractive opportunity for taking the short position, because we will get the short position, but with a very small risk. And here is what we really could get. On the 4-hour time frame chart, we see a very nice thrust down, right? And take a look. Market has formed double repo buy pattern. Thrust, close above the 3x3, close below and creating the new lows. That's very good for the double repo, and close above. So market has confirmed this double repo buy. Actually, guys, we are not really interested in the double repo per se, but we like to see the reversal pattern right at the current moment. Why? Because market could trigger upward action here, and we could get some kind of the bread and butter based on this action. It's not will be really bread and butter as it should be, because we don't have any significant numbers of candles here. It's 1, 2, 3, 4, 5, 6 candles, but we have very strong bearish momentum here. And if as a result of this double repo buy, market will reach at least 71, 75 resistance, or maybe even higher level, we could use this for taking the short position. Why? Because based on this thrusting action down, this strong bearish momentum, market definitely will show some attempt to continue move lower, based just as continuation of this impulse. By the inertia, market just will move slightly lower, and that will provide us opportunity to move our stop to the break-even. That in turn will significantly diminish the risk of the loss, because if we will get some kind of the backward action, some minor continuation, that will let us to move our stop to the break even, and whatever will happen after that, we will be protected by the break-even stop loss. If we will be wrong, the market will start to move up, well, that's okay. We will just lose nothing and we'll close the trade. If we will be right and market will turn to the breakout of this neckline and turning down with these head and shoulders, this will be much better. So we will get a very good entry opportunity. So that being said, here, based on this pattern, we will be watching for a minor retracement. Probably this retracement should not be too significant because market already stands in the neckline. It should not show some kind of very significant retracement right back up. So maybe some minor bounce will happen here before the breakout should start. That's why we'll be watching for this bounce based on this double repo. But this is also not forbidden. So if you're, the trading on the double repo directly, because if you're a scalp trader, you trade on hourly chart, on the 15-minute chart, you could watch for that pattern as well as trying to make the scalp trade. If this is really your trading style, if you trade on the short-term patterns. The consolidation of the double repo is taking the shape of the butterfly. That's also very good. I like to see the head and shoulders, double repos that has the shape of the butterflies on the lower time frame chart. So that's why it seems that our trading plan, this trading plan on the Kiwi could work. And mostly it is attractive, as I said, by the specific of the current situation that could give us the very good opportunity for significantly reduce the risk of the entry in the current setup. And overall shape of this pattern is very nice and clear, so that's why I think that's worth of our attention. So let's see how the situation will develop.